the last week, the market was terrible. The cash market, the equity market, the NSE, the Nifty was terrible, volatile. And so I actually was spending more time in the commodities market. And so I did a bit of research on this. Now, the problem with the commodities market is the risk is higher, the capital you need is higher, but there are different brokerages that offer lower margins also. And so I did a bit of research on this. Now, the two brokerages that I use are Zerodha and Finvasi. So I've included them here. Zerodha has the best charts and all of that, but the brokerage amount is a bit too high for me. That's why I use Finvasi. So I do all my commodity trading, all of that, intraday, everything on Finvasi. Okay, no point in making that, because it's zero brokerage. All the others have brokerage points. It'll cost you brokerage money on all the other three, but on Finvasi there's no brokerage. So for me that answer is very simple. But for people who don't have a lot of capital, margin might be an issue. Now Zerodha and Finvasi, the margins are kind of similar. I'll show you this down. But Alice Blue is another brokerage where the margin is a little lesser. But the best margins I've seen are on Ashtar Trade. Now I'm not a customer of Alice Blue or Ashtar Trade. I'm just saying that they have lower margins, but they have brokerage. Okay. So for me, because margin or the capital is not an issue, I am sticking with Finvasi. If your capital, so the margin is a struggle for you, you can decide accordingly. Okay. So Zerodha, the margin is not the best, neither is the brokerage. Finvasi, the margin is not the best, but the brokerage is the best. Alice Blue and Ashtar Trade, the margins are better. Ashtar Trade has the best margins, but again, their brokerage is not the best. Okay, so depending on whether you want zero brokerage or depending on whether you want lesser margin, you can make a decision, and that is not my decision. That is if you're getting involved in the commodities market. That decision you make. Okay, so let's look at the commodities market. Now you can see you have crude oil, natural gas, aluminum, gold. You also have agricultural products, rubber, cotton. Wheat, soya, a lot of stuff in the commodities market. Okay, and what you should understand is that for 1 rupee of change in the value, in the price of any of these, this is the potential profit or loss you can make. For example, the natural gas, it trades in the range of 130-ish. Okay, so when it moves from 135 to say 135 to 140, that's 5 rupees. The potential profit is 6,250. So is the potential loss, depending on whether you go long, up or long. So that's the struggle there. Crude oil, again, crude oil moves very much more. Okay, the crude oil average price is around 2,800, 2,700 now. And it can move easily 100 points in a day. Sometimes 200 points, 300 points in a day. That's the level that you can see, a range that you can see. Okay. Now, let me show you. Then there is, so there's gold also. People would suggest, look at gold and silver also as potential trades. Some of these materials don't trade a lot. So it makes no sense to get into any of them because the volumes are low. So if it's crude oil, natural gas, gold, silver, those are probably platinum, those are probably the better options. Okay, just so you guys know. Right. Now let's look at the crude oil. So for crude oil, again, like I said, for 1 rupee of change, it will change 100 rupees of profit or loss. Okay, natural gas, for 1 rupee of change in the price, we will see a profit or loss of 1,250. Now for crude oil, the tick, okay, 1 tick meaning it changes by 1 rupee each time. So your minimum loss or profit is 100 rupees. Whereas for natural gas, it changes by 0.1 on this is on the Indian market, okay, 0.1. So your 1 movement of change is actually 125, profit or loss, 125. So that is another thing that you got to understand, that the natural gas price will change by 0.1 each time, whereas crude oil will change by 1 rupee each time. Okay. So this is just some thoughts. Now look at margins for Zerodha and Finvasi. You will notice that if you want to do intraday trade, you need about 2 lakhs for crude oil. If you want to do an intraday trade for natural gas, you need about 15,000 rupees. Okay. Now this is quite easy for more people. This is not so easy for a lot of people. I like crude oil so far. Natural gas, I'm still learning. But this is the problem. A lot of people who get priced out of crude oil, natural gas, they can probably try it. Okay. Now let's look at. Now this is from Alice Blue. You will notice that their crude oil margin is 78. Okay, 78 compared to 1.9 for Zerodha and Finwase. Now, what they don't show is that right now, many brokerages have closed out MIS because of the crash in the crude oil prices in April. They don't offer MIS anymore. In that situation, it is the normal margin that they provide everybody, which is kind of the same. Okay, but look at natural gas. Natural gas, it goes down to 6,000, 7,000 rupees. Okay, margin. In Asta trade, this is Asta trade. Okay, Asta trade. Look at their margin. Their intraday margin is 10,000 rupees, and their their normal margin is again quite high, like everybody else. But the intraday margin is 10,000 rupees. For Zerodha and Finwase, it's 2 lakh. Again, it's riskier, but if you feel that that is what you, if you have the capital and you want to trade crude oil, probably the better choice here. I'm not sure if they are offering MIS. I don't know as of now. I probably need to ask them or check it out. And look at natural gas. Their margin is 3,000 rupees. Compare that to 6,000, 7,000 rupees at Alice Blue, and almost 15,000, 15,000, 16,000 at Zerodha and Finwase. And so now this is just margin, okay? There is also exposure. So actually the value will change for us depending on what we do. Sometimes exposure is basically when the volatility is high, the brokerages will increase the amount that you have to tie down to a share, because your profit and loss can go really bad in futures and in the futures market. And so your exposure might be higher. Okay. For example, for crude oil, actually they will also charge you another extra 1 lakh just to get into that position, because crude oil is very volatile, was very volatile in April. And because they're not sure, they haven't brought that down yet. So these are the basic values that you got to think about. Okay, now let me show you what the crude oil market looks like, just to help you guys. Okay, in case you want to register, please do register. But let me quickly show you the crude oil market. So how do I trade on the crude oil and the natural gas market? And I will show you that. Okay, let me get back to the chart. Okay. So for crude oil and natural gas, one, for the MCX or the commodities market that we are part of, you just need to go to, when you check natural gas, you will see MCX, click it, and it will show natural gas. Okay. That was what you got to do is this one. Okay, when you click this, it will show continuous contract. So I click continuous contract because it'll automatically roll into the next contract. And you can see all my drawings and squiggles and all of that. And so this is the price that we can trade. Now here's a good thing. Here's a good thing about the commodities market for people who work. Okay, it runs from 9 a.m. in the morning to 11:15 or 11:30 in the night. So, and most of the movement happens in the afternoon to the evening, night. Okay, so somewhere between 2 to 1 o'clock or 12 o'clock to 11 is when most of the movement happens. So a lot of people who work in the mornings, for them commodity market actually works a lot for them. It's easier for them because they're back home, they can relax and watch the trend. They don't, they don't tied between work and trading. So the commodities market is really helpful for those who work during the day. Okay, so now this natural gas is actually based off something called the Henry Hub natural gas futures in the NYMEX in the US. So I'll take that, and this is the one that I track actually. I track that and accordingly make a decision to buy on this. So I track NG1 natural gas Henry Hub, and then I make a decision on natural gas on our prices at the MCX. Similarly, US oil is WTI. Now, this is the infamous one that went all the way down to negative in between. And that's why volatility came in. So you can see, again, I do a lot of drawing on this one. So US oil is the underlying that we have to actually watch. And then the crude oil prices. So if you type crude oil, and if I take MCX, continuous contract, I can see the crude oil prices that are actually selling. Okay. So what I do, I track this and I buy on this. Now, let me show you how I do it on, say, the actual trading windows. Okay. So we go to, okay, so let me log into Finvas. And you can see here that I have crude oil and natural gas here. Okay. So I do all my trades. Like I said, I do all my intraday trades on Finvas here. So then, based on the alerts, I enter the trades here. And the margin can be a little high here, just so you know. The margin here, again, crude oil futures, you can watch charts here. You see that the chart is actually kind of similar to trading. Okay. And so that is basically what I want to say. Now, the thing about the commodities market is that you can be a little, you had probably be a little more patient. But the point is, you only had to watch two things. On the cash market, on the Nifty, I had to watch 150 shares and alerts and all of that. It gets very hard. But when it comes to, remember the basic version of TradingView? If you're just doing crude oil trading, you can easily do it with one alert, 3 indicators, 1 stop. You just need US oil and crude oil, and you should be good enough to do a trade on that. Okay, so that is just giving you an idea. Okay, but I want you to know that the level of capital needed for trading on commodities might be a little larger. Natural gas, not so much. But if you want to get the margin, lower margins, probably look at, say, Asta Trade or Alice Blue. I'm not recommending them. I don't even know them. I haven't used them. I would stick to Finvas here because for me, capital is not the issue, the brokerage is. But if you are looking at potential capital issues, then that is another option.